We will call the meeting for Thursday, March the 7th to order. First thing on our agenda is a hearing on House Bill 2663. Eileen, can you give us a bill brief?
Thank you, Mr. Chair. Good morning, committee. House Bill 2663 allows title insurance agents to submit escrow, settlement, or closing funds through certain real-time or instant payment systems. The bill amends KSA 40-1137 to allow title agents operating as an escrow, settlement, or closing agent to submit all funds deposited for real estate closing by a real-time or instant payment through the FedNow service operated by the Federal Reserve Banks or the Clearinghouse Payments Real-Time Payments or RTP system. The bill passed the House Committee of the Whole unanimously on February 22nd. If enacted, the bill would take effect on July 1st, and I can stand for questions.
Thank you, Eileen. Committee, are there questions? I see none. We will now turn our attention to the proponents. We have Dave Bloomquist on behalf of the Kansas Land Title Association. Welcome, Dave.
Push the button. Okay. I'd like to start by thanking Chairman Longbine and members of the Senate Committee on Financial Institutions and Insurance. I struggled with that the entire way here, and I struggled with it here. My name is Dave Blomquist. I live in Olathe, Kansas. I'm a Kansas attorney, and I work with Fidelity National Title Insurance Company, Chicago Title Insurance Company, and Commonwealth Land Title Insurance Company, all part of Fidelity National Financial. I'm co-chair of the Kansas Land Title Association's Legislative Committee, and I'm here today to explain why we introduced and why we support House Bill 2663, which would update the good funds portion of KSA 40-1137C. Since 1907, the Kansas Land Title Association has represented the interests of the land title industry in Kansas, consisting of title agencies, abstract companies, title insurance underwriting companies, and their employees. We specialize in the orderly and secure transfer of real estate in Kansas by protecting lenders and buyers from financial loss caused by defects in title. I'm sure, unless the committee wants me to, I don't have any intention on reading House Bill 2663 or my written testimony today. So, but I will give a nutshell version. In a nutshell, House Bill 2663 would modernize a portion of the Kansas closing process by adding the option of using real-time or instant payments through the FedNow system operated by the Federal Reserve or the Clearinghouse Payment Company's real-time payments RTP system. For a real-life example, I imagine most of you have probably purchased a home, have purchased land, or have purchased a business. When it was time to deliver funds to the title company, you might have tendered funds using a personal check. You might have used a wire transfer among the other options available under KSA 40-1137. While those options work well and while they'll still be available, they both have limitations. For example, personal checks have to sit on deposit for up to 10 days, or I'm sorry, at least 10 days. And wire transfers are subject to cutoffs and delays. I've been in this business for, I think, almost 25 years now, and I've seen too many closings delayed based on a delayed wire transfer. Typically, that happens on a Friday night, and it bumps a closing to a Monday. When I had the opportunity to appear before the House Committee, one of the members of the committee relayed her personal experience with a delay like that, which bumped a Friday closing actually to a Tuesday because the Monday was a federal holiday. So House Bill 2663 would allow real-time or instant payments. This will make Sean cringe, but for me to wrap my head around it initially, I had to think about Venmo. But through the Federal Reserve or the Clearinghouse and for larger amounts. Currently, the RTP system allows payments up to $1 million. The FedNow system through the Federal Reserve allows payments up to $500,000. Real-time or instant payments are as they sound, or as they're named. They are instant. They are secure. They're available 24 hours a day, 7 days a week, 365 days a year, so there's no cutoffs, there's no delays, and they are endorsed by and backed by the American Land Title Association. And most importantly, like I've mentioned, House Bill 2663, which would authorize real-time or instant payments, doesn't take away any of the available options. It just adds a new option that would be available. While I'm here, I thought the committee would be interested to know that similar legislation or similar bills have been introduced to our north in Nebraska and to our east in Missouri, and those are making their way through the process. Out of respect for your time, I try to be brief. Again, thank you for allowing me to appear, and I'm available for questions if you have any.
Dave, thank you very much for your testimony. Committee, are there questions? Senator Warren?
Thank you, Mr. Chair, and thank you for your testimony today. So regarding this, you'd said it would still be an option, right? No buyer or seller or either side of the transaction would have to agree to use this method of payment. Is that right? Okay. And it's only available right now for up to $1 million through the RTP and up to $500,000 for FedNow. And if one side wants to use it, but the other side doesn't, that's okay also, or explain that to me.
This is the way that buyers or people that are sending money to the title company, this is the way that they get the funds to us so that we can disperse instantly or immediately. So there wouldn't have to be an agreement. It would just be if you were the buyer and you needed to tender your funds to the title company so we could pay off the seller's mortgage and send the seller's proceeds to them, it would just be the way that you decided as the buyer to transmit your funds to us.
And the seller doesn't have to agree to receive the funds from the title company through FedNow or RTP, correct?
They would do that, but it's independent. They would give us written instructions. That would be how we handle their funds. This would be how we receive your funds.
Correct, which are two different transactions and doesn't have to be the same. Okay, thank you. Appreciate it, Mr. Chair.
Additional questions? Senator Pittman.
Okay, thanks. Thanks, Mr. Chair. And thank you, Mr. Bloomquist, for being here. It's one of those things where you're in the industry, you bring something that seems pretty obvious once you bring it up here, and it takes initiative, and it takes people like you to come in and help modernize certain of our activities, and I really appreciate that. It seems like a slam dunk to me, an obvious thing given our modern age and the Money Transfer Act that we just kind of passed through here a couple of weeks ago. However, I did have a couple questions. Why only FedNow? Is that, I mean, are we restricting any options there by only putting it towards one particular payment system?
It's two. It's a great question. It's two. It would be the FedNow system through the Federal Reserve or the RTP system through the clearinghouse. Alta chose to limit it that way because there was, I guess, for lack of a better way of saying it, those are the two largest players. The FedNow, obviously, I mean, the Federal Reserve is the Federal Reserve. The clearinghouse is, I guess, a consortium, if you will, of, I want to say 25 to 30 of the largest lenders in the world. So rather than allow, I don't know, create ambiguity, confusion, or create options that aren't maybe as secure, they chose to limit it to those two.
Thank you, Mr. Chair. If I can, it seems like we could be limiting the number of options in the benefit of one or two particular entities, but I'm okay with that to start out with right here for sure. As we move into this, do we introduce, is the reason why we haven't done this, is there any, are we introducing risk to any of the buyers, sellers, or anybody by having more instantaneous transactions in this regard, or are we, in your opinion?
Not in my opinion, we're not. The FedNow system, I believe, was introduced in July. The real-time payment system, the clearinghouse, I believe, has been around for at least 2 years. No, I don't think it introduces any additional risk.
Okay, that's great. Thanks.
Senator Fagg.
Thank you, Mr. Chairman. Thank you for your presentation. The only thing I would question, being an old banker, and times are changing, as the money goes out in these kind of things, I've been around some deals where there's a lot of money because of real estate that we're doing here. And I guess whenever they go out and it's instantaneous with what goes on, do you ever concern yourself it's getting to the right person on the other end, or do you have them sign off that they gave you instructions of where that's to go? Or it's going into an account that's in John and Mary Doe, and Mary takes the money, and John was the one that was the owner. You know, who takes on that financial responsibility of that? Do you have them sign off at the first of what they do, or do you take the risk on yourself with that kind of thing?
This would, again, be the way that buyers fund, and buyers and lenders, I guess, fund the title company.
Right.
Each agent, each underwriter, whoever was handling the closing process would have their own process and procedure for getting their instructions, their wiring instructions, or I guess FedNow instructions to the buyer and having them to the party that's transmitting the funds, and having them, and then have
Where the
them,
money's going.
having them sign off, understand the process, safeguards, things of that nature.
Yeah, okay, because you can make a mistake on that, and it goes out to the wrong place, and boom, it's gone, and so, I don't know how much that goes on, but I know a couple circumstances, big numbers, so I just, are you responsible for that, or is the individual, if 600,000 comes up missing, went to the wrong place, is it the individual that's going to be responsible for that, or is it going to be the company?
Well, I mean, I guess I would have to say it would depend. It would depend where the risk fell, where the fault fell. From our industry's perspective, we have processes and procedures to make sure.
Cover you, probably.
Well, to make sure we're getting the information to the party that's transmitting, to make sure that they know that they need to deal with us. Obviously, at the end of the day, I mean, this goes with, I guess, at the end of the day, we can't push the buttons for them. That would be a wire. That'd be the cashier's check they chose to tender. That'd be the cash they chose to bring in. But we do have, our industry has processes and procedures to try and eliminate or minimize or reduce that risk.
Okay, thank you.
Additional questions, Senator Warren?
Thank you, Mr. Chair. Logistically, since this is brand new to Kansas, how does FedNow service, kind of follow up to Senator Fagg's question, how does the FedNow service work? Does the buyer who's going to be transmitting the it can't be $600,000 because FedNow does only 500, but does the buyer, do they download an app? I mean, do they write on paper? How does this work?
If your bank, where you have your funds, you're the buyer, you're buying my house, you have to tender, X number of dollars to me. If your bank offers it, it would be within either your local bank, like you would go to the branch and have them initiate the FedNow or RTP transfer, or we know of some banks that have it, it's part of their app. It's part of their online banking system, it's part of their mobile banking system. I believe, I've not looked for it on my personal banks, but I believe it's a button where you would choose to initiate an RTP transfer, just like I could choose to initiate an ACH or a wire transfer from within the app or within the online banking.
And surely because it's similar to online banking and things, there must be some liability protection, and where it lies, I think, would be something important to know. If we could have research look into that, is it your local bank who's responsible for the mistake? Is it the receiving entity? Is it the initiator of the transaction, meaning the bank account owner? And where does the liability, where's the liability placed if something goes wrong? I'd like to know that too, if we could get some research, or the revisor as well. Thank you.
Senator Luce?
Thank you, Mr. Chairman. So are there other states that have enacted this similar?
I am not, off the top of my head, I'd have to do some research on that. I don't have, I know there are 7 that allow it by the way their good fund statutes are written. I believe that's the right number. There are a bunch where it's questionable, like Kansas, to whether it falls under the existing statute. And then there are many that are introducing the bill, or that have introduced bills similar to what we've introduced here. I would have to check and get back to you on that.
Okay, thank you.
Additional questions? Seeing none, thank you very much. Committee, let me call your attention to proponent written-only testimony from Joseph Molina on behalf of the Kansas Bar Association, and Brandon Fenton, Public Policy Field Director for the Kansas Association of Realtors. Is there an additional proponent testimony? Anyone wishing to testify neutral? Anyone in opposition? Seeing none, we will close the hearing on House Bill 2663. We will now turn our attention to a couple of bills that will be very familiar to you that came over from the House. The first one is House Bill 2715. Eileen, can you give us a review on this?
Thank you, Mr. Chair. House Bill 2715 is the identical bill to our Senate Bill 398, which allows the commissioner to set the amount of a fee for the following year and then publish that fee in the Kansas Register by December 1st for the following year. As you can recall, we have certain fees published in statute that are flat fees. What the bill would do is take that flat fee amount, make it the ceiling for an amount of discretion for the commissioner to set the fee. And then once she sets the fee, publishes it in the Kansas Register, away we go. I'm not going to list the 26 different fees that this bill would grant discretion for. They're on the brief, and I can stand for questions.
Are there questions for Eileen? Seeing none, thank you very much. Now turn our attention to the proponents. Eric, welcome back.
Thank you, Mr. Chairman. Good to see you as always, and members of the committee. Eric Turek with the Kansas Insurance Department. As the revisor stated, this does grant flexibility to the commissioner to lower the fees and fines for 26 entities, but really it comes out to being more than 100 different fees and fines with those entities specifically. Every member on this committee and almost every member but one member in your chamber voted for House Bill 2090 last year that granted the commissioner the flexibility to lower licensure fees for agents and agencies. She did that last year, and we lowered those fees, or the department lowered those fees, and we anticipate to save the industry $1.2 million for this calendar year. Future savings to be determined, and I would say the same for this bill as well. Happy to stand for questions.
Eric, thank you very much. Committee, are there questions? Eric, I assume that the commissioner would like to start lowering those fees as soon as possible.
We would like the flexibility to do so, yes.
I thought so. All right, are there any additional proponents, opponents, or neutral testimony on House Bill 2715? Seeing none, we will close the hearing on House Bill 2715. We'll open the hearing on House Bill 2787. Eileen, can you give us an overview?
Thank you, Mr. Chair, members of the committee. House Bill 2787 is not a bill that you've heard before. It updates certain definitions, terms, and conditions relating to coverage by the Kansas Insurance Guarantee Association and authorizes the commissioner to reduce the number of members on the association's board of directors. House Bill 2787 amends KSA 402903, 405905, 402906, and 402910 pertaining to the Kansas Insurance Guarantee Association. The bill passed the House Committee of the Whole unanimously on February 22nd. Section 1 of the bill amends KSA 40-2903, which is the definition section of the Act. Back in 2022, the NAIC met to address the issue of continuity of guarantee fund coverage. When a policy is transferred from one insurer to another, the fix for the issue was to amend the definition of covered claim to have that claim include claim obligations that arose through the issuance of an insurance policy by a member insurer that are later allocated, transferred, merged into, novated, assumed by, or otherwise made the sole responsibility of a member or non-member insurer. There are 3 conditions to that. Number 1, if the original member insurer has no remaining obligation on the policy after the transfer. Second, a final order of liquidation with a finding of insolvency has been entered against the insurer that assumed the members' coverage obligations by a court of competent jurisdiction in the insured state of domicile. And third, if the claim would have been a covered claim as defined in subsection C1. If the claim had remained the responsibility of the original member insurer and the order of liquidation had been entered against the original member insurer with the same claim submission date. Sorry, there's 4 conditions. And number 4, in cases where the member's coverage obligations were assumed by a non-member insurer, the transaction received prior regulatory or judicial approval. Additionally, the term cybersecurity insurance has been added as a defined term on page 3 in lines 2 through 7. Section 2 of the bill amends KSA 40-2905 pertaining to the number of board members of the association. The bill would reduce the number of board members from 9 to no more than 7 as of January 1st of next year, based on the commissioner's determination at the expiration of each board member's term whether or not to continue the board member's position on the board. Members would be selected by member insurers and then would serve a term of 3 years, but would be removable for inefficiency, neglect of duty, or malfeasance. Section 3 of the bill amends KSA 40-2906 relating to insolvency of a member insurer and duties of the association. Here, the amendment would add language to limit the association's exposure in the event of a cybersecurity claim. The language added would specify that in no event would the association be obligated to pay an amount in excess of $300,000 for all first and third party claims under a policy or endorsement providing or that is found to provide cybersecurity insurance coverage and arising out of or related to a single insured event, regardless of the number of claims made or the number of claimants. Section 4 of the bill amends KSA 40-2910 pertaining to the exhaustion of rights under an insurance policy and claim recovery reductions. Under current law, a claimant filing a claim against an insurer under any provision in an insurance policy other than a policy of an insolvent insurer that is also a covered claim is required to exhaust the claimant's rights under the policy and includes a claim under any kind of insurance, whether such claim is a first or third party claim, and shall include, quote, without limitation, and shall include without limitation accident and health insurance, workers' compensation insurance, Blue Cross and Blue Shield, and all other coverages except for policies of an insolvent insurer. Any amount payable on a covered claim under the Association Act would be reduced by the full applicable limits stated in the other insurance policy or by the amount of any recovery under such insurance policy. The bill would amend the statute to add any right under a life insurance policy as an exception to the reduction of claim process. And the bill would further clarify that the claim would be reduced by the lesser of 1, the association's covered claim limit, 2, the amount of judgment on the settlement of the claim, or 3, policy limits on the insolvent insurer's policy. If enacted, the bill would become effective on July 1st of this year, and I can stand for questions.
Eileen, thank you very much. Committee, are there questions? I see none. Thank you. We will now turn our attention to the proponents. Eric, you're back up.
Thank you, Mr. Chairman, members of the committee. I'm Eric Turek with the Kansas Insurance Department here today. And the department introduced House Bill 2787, which passed the House 119-0. This updates the statutes that govern the Kansas Insurance Guarantee Association. And for those, I'm sure many of you already know that the purpose of any guarantee association is to cover the claims of policyholders whose insurance company has become insolvent or cannot afford to pay the claims. And really, if I could be a lot more brief than the reviser, this provides updates that were in the form of the from the NEIC's Model Act to the Model Act named the Property and Casualty Insurance Guarantee Association Model Act. It really just codifies cybersecurity provisions and clarifies a few other things. So happy to stand for questions.
Thank you, committee. Are there questions? Senator Fagg?
Thank you, Mr. Chairman. Eric, thank you for your presentation. When you, as far as the board of directors, what kind of compensation do they get?
That is a great question. One thing I'd like to clarify real quick. We are not reducing the board membership here. I think it may have been stated that the maximum would be reduced. And so the current membership is at 9. And per the model, we are reducing that from 9 to 7 to 9. So, and in terms of compensation, I believe that the board itself, or the association itself, provides the compensation. I can double check on that.
Thank you.
Are there additional questions? Senator Pittman?
Yeah, I'm interested in the cybersecurity piece of this. we're actually calling that out as a definition inside of the statutes, right? That's correct? Yep. And it's also capping the amount that any claim can be at 300,000 per event. Is that correct?
Yes, so in statute, and if I can look at the bill, if I can find the, so currently there are already those maximum liabilities in statute for all P&C claims. This just extends that to cybersecurity insurance as well. So it doesn't change the threshold of what's already in statute. It just clarifies that that maximum liability would be extended to cybersecurity insurance, even though it's saying it twice.
So are you saying that the PNC claims right now for everything else are at $300,000 as a max, or is this 300,000 specific to, I don't know those statutes?
Sure, yes. So if you look at the page 4 of the bill, line 6 is where you'll see for all P&C claims, it's 300,000, and then line 11, just beneath that, that's the cybersecurity insurance provision. And I will say that those two thresholds are the same, they are different amounts in the model, though from what is in, so it's not 300,000 in the model, but the cybersecurity insurance maximum liabilities and general P&C liabilities, they are the same in the model. So we're just following what is currently in statute in that regard.
Is there any way we could maybe get an idea about across the states what that PNC number looks like across different states, as well as the cybersecurity limit threshold? And try not to cherry pick just on our local. It'd be nice to see kind of a broad spectrum on that. Thank you so much.
Additional questions? Eric, just for my understanding of the bill, the $300,000 limit is only on the guaranteed insurance company, correct? So you could, as a purchaser of insurance, I could get much higher limits through my own insurance company. I could insure cyber, as an example, for $3 million. But if my company becomes insolvent, the policy limit on the guarantee is only 300. Is that, am I correct?
There's nothing that would prohibit you from any business or individual from obtaining a policy that goes beyond 300,000, a million, as you said, or whatever the threshold may be. This is just for, or in the case of insolvencies specifically.
Okay. Committee, are there additional questions? All right. Eric, thank you very much. Are there any additional proponents, opponents, or neutrals on House Bill 2787? I see none. We will close the hearing on 2787. Committee, that completes our work for today. We will not meet tomorrow. We will not meet on Monday. But we do have a number of hearings next week. I don't anticipate any of those will take the full hour. So what I would like to do is we will possibly work bills as time allows rather than saving them up for one big day. So if you have concerns or you have amendments, please get those drafted or get those to Eileen so that if we happen to work the bill because we have time available, we're ready to go. And if not, we'll skip that bill and do it the next day. But we'll kind of try to complete our work. My goal is to maybe give you like a whole week off before the end of session. So, any other business?